Our primary focus for this short video will be how Social Security relates to a minister. But first, let me share a little investing for retirement information. The best retirement investing plan for ministers is simple. Put as much into a 403b tax-sheltered annuity plan as possible. Why? Well, consider these two special benefits for ministers. Prior to retirement, all non-elective and elective employer contributions for a minister to a 403b plan are excludable for income and Social Security SECA purposes. For ministers that have not opted out of Social Security, and it is the rare minister who qualifies to opt out, this means an immediate 15.3% tax savings on all monies contributed to a 403b-9 church plan. For those who have opted out, it's advisable to contribute 15.3% of salary to the retirement plan. As we've already covered in some of our other videos, the minister's housing exclusion is one of the great tax benefits available to ministers. It gets better because after retirement, a minister can take distributions from their denominationally sponsored or church-sponsored 403b-9 retirement plan as part of an ongoing housing allowance, subject to the regular housing allowance limitations. Let me share an example. After retirement, a minister receives a $20,000 distribution from a 403b-9 plan. The entire $20,000 was designated by the denominational pension plan as a housing allowance. The $20,000 distribution would be excluded for income tax purposes if the full $20,000 is spent on housing. Income and Social Security taxes were saved with the original contributions, and now there are no income or Social Security taxes when the funds are received as a distribution. As you can see, this is a great double benefit. Now, let's move to 5 key issues for Social Security and ministers. Number 1, the fundamentals of Social Security. The age for collecting the full Social Security benefit used to be 65, but no longer. Full retirement gradually increases from age 65 to 67. Social Security benefits are income tax-free for the majority of beneficiaries. However, those with high total incomes must include up to 85% of their benefits as income for federal income tax purposes. If a minister is under full retirement age, he or she loses $1 of Social Security benefits for every $2 earned over a certain limit. After the full retirement age is reached, one can earn as much as desired with no cut in benefits. Dollars from income excluded because of the housing allowance are included in the earnings test. Number 2, the 2 Social Security tax systems. Social Security taxes are collected under 2 systems. Under the Federal Insurance Contributions, or FICA Act, the church pays one half of the tax and the employee pays the other half. Under the Self-Employment Contributions Act, or SECA, the self-employed person pays all of the self-employment tax as calculated on the taxpayer's Schedule SE. Ministers are always self-employed for Social Security purposes, subject to SECA under the tax law with respect to services performed in the exercise of their ministry at the church. When FICA-type Social Security tax is improperly withheld from a minister's pay and matched by the church, it subjects the minister and the church to possible action by the IRS because of underpayment of income tax by the minister. You can read more examples about this in the Minister's Tax and Financial Guide by ECFA. Number 3, computing the self-employment tax. When computing the self-employment tax, your net earnings include the gross income earned from performing qualified services minus the deductions related to that income. This includes church compensation reported in Box 1 of Form W-2, the net profit or loss from Schedule C, any housing allowance and the fair rental value of church-provided housing excluded from Form W-2, Box 1. The minister may deduct unreimbursed business expenses for the SECA computation even though the deductions are not claimed elsewhere on Form 1040. Number 4, self-employment tax deductions. Ministers can take an income tax deduction equal to 1/2 of their self-employment tax liability on the Form 1040. They may also deduct a portion of their self-employment tax liability in calculating their self-employment tax on Schedule SE. Number 5, opting out of Social Security. To opt out of Social Security, a minister must certify on Form 4361 that he or she is opposed, either conscientiously or because of religious principles, to the acceptance of any public insurance with respect to services performed as a minister, including Social Security benefits. Either opposition must be based on religious belief. This includes an opposition to insurance that helps pay for or provide services for medical care, such as Medicare and Social Security benefits. Neither economics nor any other non-religious reason is a valid basis for opting out of Social Security. Many ministers are improperly counseled to opt out of Social Security because they think it may not be a good investment. The minister's view of the soundness of the Social Security program has absolutely no relationship to the application for exemption. Social Security is such an important benefit for ministers, and it is important that ministers clearly understand the 5 Social Security principles that we've shared in this video to help maximize its benefits in retirement.